Welcome to your September mortgage and housing update. So in this video, I'm going to be covering with you guys how I'm approaching locking rates in a volatile market. We're also going to talk about what I'm seeing with inventory across the country. Now, for any of you who are new to the channel, I am a mortgage lender licensed in 48 states. My team is one of the top purchase teams in the country. So we see a lot. And that's what I'm here to share with you. What am I seeing? What are my strategies? What can you guys take from that to help put yourself in a better position to buy a house? Now, if you guys have been watching this channel for a while, you may have noticed that we're doing some editing now. I never had editing on my channel. It was always just one take. It's still one take, but now they're zooming in and out. I don't know what's going on. I would love your feedback on it though. The gal I'm working with is a sweetheart. She wants this to be a better viewing experience for you. I do too. So any feedback you have, we appreciate it. I won't take it personally. If you don't like my hair or something like that, I might take that personally. I don't know. Maybe I won't. We'll see. But yes, your feedback's appreciated. Okay, you don't care about that. Let's move on. Woof. Rates. Okay, 2023 sucks, guys. I'm going to tell you why it sucks. Like, I'm not going to sugarcoat this. I could show you a graph of like what's going on with rates. We could talk about what the economists think, but let's just put this into English and stop the bullshit, because I'm so sick of those videos with the graphs that no one understands, where they're trying to show you that there's something miraculous that's going to happen, yet it never does. Sorry, that's true. It's bullshit. Okay, so what's actually going on? Basically, rates are teeter-tottering, okay? So they go up, they go down. They go up, they go down. They go up, they go down. So what's driving this? Well, you've got this huge tug-of-war between, is the economy doing great? You know, inflation, and then you've got this other side going, well, wait a second, are we in a recession? How are people handling this? How does this make sense? And it's constantly going back and forth, and rates are reacting in response to that. That is what's going on. So something that I did a lot of in the past, if you guys have watched this channel once again, is called Lock and Shop. And I'm going to talk to you about what that product is, how I've been using it this year, and how I'm thinking about it long-term for the end of the year. Okay, so Lock and Shop is a product where I can lock your rate while you shop. Last year, it's all I was doing, like nonstop. And the reason I was doing so much of it is because we knew which way the market was going. We knew the market was going up. It was very clear. The Fed had said specifically, this is what we're doing. This is what we expect. And so when I would look at pricing, the difference between a 30-day lock, okay, because lenders, when we're locking, we're looking at the time period of the lock. So I would look at a 30-day lock versus a 90-day lock. The 90-day lock might be an eighth, maybe 1/4% higher, okay? But we knew rates were going to go up. And at the pace they were going up, this made sense, okay? Also, I had the ability to renegotiate the rate if the rates dropped while people were in contract, okay, based off of a 45-day lock. Very great. Had a lot of fun with that. Lots of success with that product. Okay. And the reason it was so successful is because people, it could take a while to go shopping, you know, and look, we had a lot of people where we locked them, they never found a house, or we locked them twice and they never found a house, and we didn't charge for that. Okay. And whenever a bank has you locked, we are hedging money. So very important for you guys to know, generally a 30-day lock is cheaper than a 90-day lock, because we're holding the money for a shorter period of time and we have less risk. So knowing that rates were going to go up all last year, the rates were only slightly higher because we knew we would be able to sell those loans and that was the direction the market was going in. Okay, great product. 2023. Oh, 2023, for the bulk of the year, my 90-day rate locks have been terrible. They've been really high. And so you may go, well, why, Jen? Why are your 90-day rates so high now? It's because no one knows where the market's going because of this teeter-totter, right? And as a lender, when they're putting together pricing, if they put together the pricing, let's say they just did an eighth higher than a 30-day lock, and the market jumps, they're going to have a hard time selling those loans, okay? If they do it, you know, a lot higher, and then rates go down, we're going to lose the client. Okay, because we're just not going to be able to renegotiate them to where they want to be. And what I've been seeing with the teeter-totter is like, you know, if we're here, let's say you get into contract and you're like, shoot, it's up here, Jen. A lot of times by the time we get, you know, halfway through the contract, it's here and we're renegotiating. Okay, So you may now be going, Jen, but the lock-in shop you could renegotiate. So what's the deal? Terms change. That's right. And look, guys, some lenders don't even offer this product. We do offer this product, and I'm very thankful that Guaranteed Rate does. It's a product that costs us a lot of money because there are so many people that you lock and maybe they don't buy a house, or maybe they take a break, or, you know, we're hedging money to do that. So I am very thankful for the product. They changed the terms of renegotiation, which honestly, they were very generous last year, and I was having a blast with it. So now let's say I lock you for 90 days. In the past, if you got into contract and let's say it's day 87, I could renegotiate you as if it was a 45-day lock. 45-day locks are always cheaper than 90 days because once again, we're holding the money for a shorter period of time, okay? Well, they changed it. So now if it's day 89, I can only renegotiate you based off of a 90-day lock. If it's at day 65, I'm renegotiating you based off of 75 days. So it's less compelling on the renegotiation front, which is why I haven't been doing it as much. Now, look, if you guys want the option, if you're like, Jen, I want the lock-in shop option, you know, we're always happy to give that to you. I'm always happy to do it. I just want to make sure that you understand why I haven't been pushing it as much this year. Because as a lender, it's my job to make sure I'm giving you the best information on interest rates. I'm watching the market. I have a strategy. I'm seeing what works. I'm using every single tool, product, ability that my company offers to benefit you. That's my job, okay? So this year, what I've been doing more of is we've been waiting until people get into contract. You know, sometimes we luck out and we're at the low side of the teeter-totter. Other times we're at the high, and then we're looking for that ability to renegotiate down. Now, is there a guarantee that we'll renegotiate down? No, the market has to actually drop for that renegotiation to occur, okay? It's a lot, right? For a lot of you guys, you're like, oh God, Jen. But look, here's the thing. You guys need to know this, because the biggest way that I see consumers getting harmed right now is with interest rates. So for instance, and it's not just because interest rates are high right now, it's because the lender either A, isn't paying attention, B, doesn't know the products that their company offers, C, is too lazy to use products the company offers. Like there's a lot of people that don't, there's other companies that do renegotiations. There's a lot of people that don't tell their clients about it because they don't want the client checking in about rates all the time. I don't care. Check in with me and my team daily. Like we're honest, we're transparent. We know it's our job, but a lot of people don't want to be bothered. Okay. So something you guys should be asking is, hey, at what point will you lock my loan? What are my options? B, if my loan is locked and rates go down, do I have the ability to renegotiate? And what are the terms for that? Okay. Really important. You know, 3, if you think you're locked, you guys need to verify it. You want it in writing, because I am seeing so many people right now, and I did a short video on about the number one lender lie to look out for. And that number one lender lie was lenders were telling people they were locked when they're not. So why would a lender do that? Well, a lender's doing that because they don't want to lose your business. So they're bullshitting you about the rate up front, and they're hoping that they get that low point of the teeter-totter. Okay. They are gambling with your money, and that's not okay. So if you guys are in contract and you think you're locked, I need you guys to look at your loan estimate right now. And I want you to see if the box is checked that says locked. Okay. Now, the other thing I would avoid right now, I would avoid companies that are charging upfront rate locks. I think it's ridiculous. The only time you're going to have a legit upfront rate lock is if you're doing like a long-term construction loan, like over 90 days. Most lenders charge an upfront lock fee, and that's because they're hedging money for such a long period of time that they don't want to run the risk that you ditch them. And if you do ditch them, they want to make sure they're going to at least get what they paid to do that back, okay? But I am seeing some lenders right now where they're offering really, really low rates, but they won't actually lock you until you give them close to $1,000. It's not a normal thing, and it's not something we should be encouraging in the industry. So I really want you guys to be aware of that. This is what I'm thinking the most of. So that was all rates and locking. You really need to be paying attention to the teeter-totter. I talk about it in other videos. Mortgage News Daily is my favorite. And it's just because it will show you the articles of what's going on in the market. It has an average of rates across the country. Now, is your rate going to necessarily be that? It might be higher, it might be lower. It's going to depend on your individual circumstances and the lender you're working with. But if you guys are looking at that average and your rate is way higher, you need to be asking your lender why, okay? Because I am seeing lenders, because volume's down, they're charging more than they normally would to do a loan because they're trying to survive. So you want to watch out for that. Okay, housing inventory. Okay, let's talk about housing inventory. Look, it's going to depend on where you guys live. It's a very interesting time in United States real estate because traditionally you've had it where the country kind of moves like hot market, slow market, and it's more unified. Right now, it's literally market by market. So, and I'll see people where there's so much confusion as a buyer because you're like, well, wait a second, I'm on Reddit. So guys, I'm on Reddit all the time now. If you find me, like, say hi, please. And you've got people saying, oh, there's so many houses for sale in my market. I can pick whatever I want. And then you have people saying, well, in my market, it's $40,000 over. Okay. So what you guys need to know right now is that how much inventory there is, how much demand there is very much market to market. So if you're in a market where you see a bunch of houses for sale and prices are going down, it does not mean the United States real estate industry is collapsing. It means you're in a market where there's more inventory and there's less buyers. It's that simple. There are still far too many, markets. And I say far too many because look, it's not fun. It is not fun for the buyer. It is not fun for the lender. I don't want you guys going out and writing an offer and there's 20 other offers. That's not good for you. And it's not good for my business, to be blunt. So there are still a lot of markets like that. So you could be in one of those markets and you could be like, well, wait, this doesn't feel right because I hear from this person that there's lots of houses. You need to understand right now that it's like microclimates. Okay. So instead of looking at these generic articles that are like the United States housing market, it depends. It's market by market. That's what I see. Okay. So look, I don't want to go on for days. Anything you guys need, please let me know. I have a calendar where you guys can ask free questions. Sandy and Alyssa, man, the phone's on that. They're both licensed originators. They're great. And if they don't know the answer, they're going to come to me. And if I don't know the answer, I'm going to go to an underwriter. But whether you're working with us or not, we're always going to try to get you guys the best information. If you want a loan, I'm licensed in 48 states. Please reach out, apply, whatever. Look, we're here to support you guys. So thanks for watching. If you made it to the end, I know there's only a few that do. So I appreciate you guys.